Hello, it's Robert Miner with Dynamic Traders Group with today's 5-minute update and trade strategy for our Twitter and YouTube followers. Let's take a look at a potential high probability trades coming up next week. Quick look at the S&P. This is the S&P weekly. Made a dual look back weekly momentum bear reversal last week, the first one in many months. And more than likely, a weekly high is complete. We need to have a weekly close below the prior week's, 2 weeks ago close. That's 30, 90, 50. That's a weekly close. Can't have one of those until next Friday. So that would confirm the weekly high. And until that's made, there's a possibility. Well, there's always a possibility we could go higher. But this is the technical signal on position you really need to be aware of. We did make closed lower in the week and made a weekly momentum bear reversal. Here's daily. We made the initial daily reversal signal both in momentum and in price, but boy, haven't gone anywhere since that, have we? So I anticipated the prior week, the week before just this past week, would make that high. So I was off by a day in the closing because the closing high so far, at least, has been Monday. Intraday high was on Tuesday. So timing-wise, we're in the extreme of time to complete a weekly high. But we haven't confirmed yet that weekly high is complete. So here's what I'm looking at. Make it real simple. Here's 60-minute data off of the high last Tuesday, intraday high. More or less impulsive decline. This is Elliott wave talk and terminology. What's this? Well, that's a correction, or it should be a correction. We'll put it that way. It's a corrective pattern. So typically, the outcome when a correction is complete is a resumption of the bear trend. So if you're not already short, trading below Friday's low will break this corrective pattern and indicate that the bear trend is going to continue to a new low. For how long? Probably 2 to 3 weeks if that should happen. And certainly if we closed above the 78.6% retracement, that's at 31.2357, the immediate bear outlook at least is voided. So just look at this and keep it real simple. Impulsive down, correction in the last couple of days. And when we take out the corrective lower, the most recent swing low within the correction will probably continue lower. So develop your trade plan around that position. So in today's update, I'm just reviewing two of my favorites, and also because I think they're in fantastic positions for very low risk trade opportunities. So we just saw the ES. And again, I don't forecast, I identify trade setups. Here's gold, and gold's my favorite, and nothing's changed in our outlook for gold. It's more than likely we've completed an ABC correction right into the extremes of time and the typical price for a wave 4 correction. And our weekly momentums are dual look back bullish. Here we are on the daily data. Again, this is a corrective pattern. More than likely it's complete a couple of weeks ago, and our trade strategy for the past week or more has been the next daily momentum bull reversal will put the daily and weekly momentums in sync to continue a bull trend and confirm this wave 4 low. So that's what we're going to be looking at this week. Whatever momentum indicator or oscillator that you use that's reliable to identify swing lows and highs, be looking at it over the next few days, because the next bull reversal, particularly if price is not closed below 1453.70, will be the textbook dual time frame momentum setup to position with very low capital exposure for long trades in gold, silver, and the GDX. And I think that's coming up in the next 2 or 3 trading days. So that's why we want to be alive, alert, awakened, and enthusiastic about this trade setup that's coming up this coming week. And from my point of view, even if gold has closed below 1453.70, it's still a setup for a long trade on a dual time frame momentum trade. The pattern won't be as good, indicating we're going to then continue in a weekly trend to new highs, but it'll be a setup that'll be good, should be good at least for at least 3 to 4 or 5 days on the long side, be able to adjust or stop probably relatively quickly, at least to break even, and then in the event that indeed the weekly trend is going to continue to new highs. So wherever the price is on the next daily momentum bull reversal, it's going to be a setup for a long trade. That's it for today. I hope you have a fantastic Thanksgiving vacation. Take some time off, have some fun with your family and friends, and we'll be back with you next week. Take care.